In your portfolio, large cap funds would surely provide good stability and less volatility. But for better returns, you always need fund with steroids. Yes, that is small cap funds in your portfolio. So in today's video, we'll do a detailed analysis of one more popular small cap fund, that is Quant small cap fund, and check its performance using real data. And by the end of the video, we shall be able to decide whether to continue our investment in this fund or should exit this fund now. So please watch the video till the end. Hello everyone, I am Dhaval and welcome to my channel DIY Finance. To start with, we all know that Quant Small Cap Fund has been one of the star performers in its category, that is small cap category. Here we will be considering data of direct plans only. Firstly, let's look at the basic details like AUM, that is total asset under management, which is around 2,600 crores, which is okay for a small cap fund. Quite a few content creators had been avoiding this fund, and in fact, most of the schemes of Quant AMC due to low AUM. I hope they now do not have this reason to avoid Quant fund house schemes. The expense ratio is 0.62%, which is not too less but not too much also as compared to other schemes in the category. The benchmark index, that is the reference against which the scheme is compared, is Nifty Small Cap 250 TRI. Now let's look at the sector-wise allocation and compare it to its benchmark index. From the table, it is very clear that the fund is heavily invested in consumer staples, followed by finance, services, chemicals, and constructions. Finance and construction being core sectors, whereas consumer staples, chemical, and technology being evergreen sector, and quite a good performing small size companies form a part of this sector. And when compared to its benchmark, its allocation is quite different than the category except for the chemical sector. Here, there is no overexposure to a specific sector, which provides a good diversification to the overall portfolio. Now let's check the top holdings and portfolio allocation. As evident, ITC and Bikaji Foods are the main stocks of the consumer staples. Here one thing should be noted that Bikaji Foods has been recently listed, but the fund manager are not hesitant on going for it, which shows that the fund managers are ready to try out new things in the market. RBL Bank and PNB are the main stocks of the financial sectors, whereas TV18 is from the service sector. And again, a newly listed company, Archin Chemicals, from the chemical sector. Here, the stock selection looks good. On checking the portfolio allocation, it is evident that the small cap shares form around 55% of the portfolio, whereas mid cap shares form other 28%, and the rest 17% is allocated to large cap stocks. With the above allocation, the fund is able to generate a good return in long run with medium to high risk. The portfolio allocation is quite good and very suitable for a long-term investor. Now let's look at the fund managers. Mr. Sanjeev Sharma has been managing the fund since October 2019, that is almost from the start of the scheme. Here, please note that in 2018, Quant took over the AMC from Escorts, and after taking over by Quant, a lot of changes have been made in the scheme attribute and the fund managers. Hence, in the future part of the video, we'll look into data of last 5 years and less only. Mr. Sanjeev Sharma has been joined by Mr. Ankit Pandey in May 2020 and Mr. Vasav Sahgal in April 2022. All three of them together have been managing not only the small cap fund but most of the schemes of Quant AMC, and that too very efficiently, and hope that they continue in future also. Here, this long-standing association of the fund manager with the same scheme is quite positive and an advantage for the scheme. Now let's see how the fund performs on risk parameters. Here, we compare the parameters with the benchmark index and the category average. First, the mean return. that is the average return in a year, which is 48.74, which is far more than both the category average and the benchmark. Here, higher the value is better. Second one, standard deviation. That is a tool to measure how much the return has deviated away from the mean return, which in this case is 31.19, which is more than both the benchmark index and the category average. Here, lower the value is better. Third one, Sharpe ratio. That is a tool to measure the risk adjusted return, which is 1.45, which is more than both the benchmark index and the category average. Here, higher the value is better. Fourth one, beta, that is the volatility of the scheme as compared to the benchmark, which is 0.94, which is more than the category average. Here, lower the value is better. Fifth one, alpha, that is a tool that measures how much better the fund has performed compared to the category. Here, it is 21.18, which is far more than the category average. Here, higher the value is better. Hence, after looking at all the risk parameters, it can be concluded that the fund's performance is quite good as compared to the benchmark and the category, but this comes with a little higher volatility. Now let's compare the trailing returns. On comparing the trailing returns for 5 years, 3 years, 1 year and less, it is seen that the fund is able to beat its benchmark and the category average, and that also with a good margin. Here I have ignored the data of 7 years. As mentioned earlier, that the Quant took over the AMC from Escorts in 2018 only. Now let's also check the calendar returns and see how the fund is consistent in its performance. And checking the calendar returns from 2018, it is very evident that the fund has outperformed its category and benchmark for the entire period except for 2019. Now let's also check the performance of this fund for the first 3 quarters of 2022. Here also, if you see, the fund has outperformed all the 3 quarters of 2022. Hence, from the calendar returns, it can be concluded that the fund is quite consistent in its performance. Now let's also see the rolling returns. In checking the rolling returns for 5 years, 3 years and 1 year, it can be observed that the performance of the fund is better than the benchmark and has been able to beat the benchmark 71% for 5 years and 3 years. And for 1 year, it is 87% during the returns period, which also indicates that the fund's performance is quite good across almost all the periods. Now let's also see the upside and downside capture ratios. The upside capture ratio is the measure of how the fund performed relative to the index during the period when the index rose. Here, the value is 126, which indicates that the fund outperformed 26% more than the index during the rise period. Here, higher the value is better and should generally be more than 100. The downside capture ratio is the measure of how the fund performed relative to the index during the period when the index has dropped. Here, the value is 84, which indicates that the fund declined 84% as compared to the index during the fall period. Here, lower the value is better. Here, the upside capture ratio is quite good, whereas downside capture ratio is okay. Now let's see the risk return graph. Here, on x-axis, we have standard deviation, whereas on y-axis, we have total returns. It is very evident from the graph that the fund has higher total returns value with higher standard deviation as compared to the category average and the index, which indicates that the fund is able to generate better returns but with higher volatility as compared to both the index and the category. And this is quite okay for a small cap fund. So now coming to the conclusion, what investors should do. Before concluding this video and suggest what investors should do, I would request all of you that as you have watched the video till now, it seems that the topic is of your interest. Hence, I would request all of you to press the like button and also subscribe to my channel if you have not done till now to watch such interesting videos in future also. So now let's look what investors should do. First, the existing investors. The fund has been performing quite good since almost last 4 to 5 years. And so I feel existing investors should not worry and continue their investment in this fund. Second, for the new investors, one can start new investment in this fund. Yes, the fund is more volatile than its peers, but is able to generate a good return. And we all know that small cap funds tend to be volatile. So, if you have an investment horizon of 7 years and more, you can surely start investment in this fund. I would like to add that the website of Quant AMC is not very polished as compared to other established AMCs, and they do not have their own transaction portal also. They are presently doing their online transactions through MF utilities. This is a small hurdle for online investors, especially the DIY investors, but hope Quant will do the needful in near future to provide a better user experience on its website and transaction portal. I would like to add that I have Quant small cap fund in my portfolio and will be continuing my investment till my next review of this fund. Do check my older videos. Click the attached cards to watch the videos. Thank you.